So we hit peak industrial production in 2008, and almost nowhere has it gone higher. The US industrial production has been sideways ever since. And many nations, particularly in Europe, it's actually gone down. Germany's down, the UK's down, Spain is down, Italy's down. These are really bad things. So our productivity has declined. Our trend rate of growth has declined. Asset prices keep rising, but they're unaffordable for all of us.
In 2008, the world was rocked by the collapse of the banking and real estate industries, driven by unsustainable levels of leverage. The global financial system faced a crisis akin to the Great Depression of 1929. However, intervention by central banks, led by then-Fed Chair Ben Bernanke, averted total collapse by employing strategies to devalue money and stabilize the system temporarily. Subsequent rounds of quantitative easing only prolonged the system's reliance on central bank support and inflated asset prices. This dependency has rendered the system incapable of self-regulation, forcing central banks into a perpetual cycle of money printing to prop up the economy. Real Vision's Raoul argues that this dependence has transformed central banks into guardians of the aging baby boomer investor complex, whose collapse would spell catastrophe for the entire financial system. Powell identifies the root of the problem in the baby boomer generation, whose demographic weight fueled inflation and asset price surges. Despite attempts to address underlying issues through monetary policy, the system remains deeply flawed and unsustainable. Powell contends that breaking free from this cycle of debt slavery requires radical systemic changes rather than superficial band-aid solutions.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our Crypto Cheat Guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
All the central banks agreed pretty much around the same period of time to start printing money, debasing all of fiat currency. Asset prices ripped. If asset prices ripped, well, guess what? The collateral of the system is now saved. So they save the system via this particular mechanism. Now, these are optics. They're not reality. They're optics. And I've spoken before, if you divide any of the assets since 2008 by the Fed balance sheet or global total liquidity or any one of these measures, they've gone nowhere. That whole fiat currency debt-driven bubble regime died in 2008. And GDP globally fell. The trend rate of GDP growth ratcheted lower and never rose. But you see, more things happened after 2008 that people aren't really aware of. For example, the dollar has been rising since then. Why? Because the dollar is the global reserve currency, most of the global debts are in dollars, and there's a shortage of global dollars, and there has been since 2008, and really exacerbated by the time we got to the European financial crisis. So there's a shortage of dollars, there's a shortage of global lenders because of Basel III and the agreements with the banking system. So the dollar rises. Okay, fine, we can deal with that, and that's part of Brent Johnson's dollar milkshake theory. But more importantly, when we look at global equity markets in dollar terms, they haven't gone up. See, here's the MSCI world. It basically hasn't gone up since 2008. When we look at, let's say, a country like Spain in Europe, Spain, I was there over that period of time. It was a terrible situation. Spanish stock market in dollars hasn't gone up. Italy, dollars, hasn't gone up. The Eurostoxx in dollars hasn't really gone up. The FTSE in dollars hasn't really gone up. MSCI emerging markets haven't gone up. They've gone nowhere since 2008 in dollar terms. And the same with Shanghai. So the Chinese equity market or the Bloomberg commodity market peaked back then. There's only a few markets that have outperformed this. And those are the ones that I've talked about in the past. Those were technology, crypto. You could argue India as well because it's different demographic cycle. But not only did equity markets peak in 2008, but we also peaked in total debts. So really what we've seen is debt market has peaked. The US debt market peaked. In the pandemic, we had that extra spike, but really it peaked a while ago. And I've talked about this before, and I'll come onto this in a bit, is is the debt growth now is really just offsetting the interest payments. And it's all around trend rate of GDP growth. So therefore, debt is not growing faster than trend rate of GDP growth, really, because it's the missing trend rate of GDP growth that goes into paying the interest payments, and the interest payments are where the debt growth is. Those are the deficits that we see. So we've now been fucked because asset prices are rising and we can't borrow money to even get into the property market, but they're also becoming unaffordable because our wages never went up. Okay, so those are the two of the key reasons why. Now, what we need to do is figure out, okay, what does this all mean? Now, what I've shown from all of this is that really the governments have just offset the debt growth via the printing of money. And the balance sheet keeps going up. And that is the debasement of currency effect that is so pernicious. You've got to think of debasement of currency as a hidden tax on everybody. So we're all unable to afford any of these things, and they have just monetized all of the differences here. We've all become debt slaves because it's been mutualized to all of us. They could have increased taxes by 15%, but they didn't. They did it this way. Now, that's also made the rich get richer because they can own the asset, and the poor get shut behind it.
During the Great Financial Crisis, the world witnessed widespread damage, permanently altering the futures of billions. However, while many struggled to recover, the wealthy emerged largely unscathed, if not stronger. Forbes reported a surge in the number of billionaires, whose combined net worth skyrocketed from $900 billion in 2007 to a staggering $4.4 trillion in 2008. By 2022, this figure had soared to an astonishing $12.7 trillion. Moreover, between 2008 and 2019, the world's richest individuals saw their wealth more than double, reaching a record $7.2 trillion, as revealed by a report from Capgemini. This exponential growth in wealth stood in stark contrast to the increasing poverty levels globally. Oxfam's findings during the pandemic underscored this disparity, with 131 billionaires doubling their net worth while nearly 10 million people fell below the poverty line. Central bank interventions, while aiming to stabilize economies, have exacerbated global inequality, widening the gap between the wealthy and the impoverished. This cycle of wealth concentration continues unabated, amplifying socioeconomic disparities with each round of monetary policy. Powell delves deeper into these systemic issues in his video discussion, shedding light on the profound implications for society.
But the other thing that we have hit is peak humans. You see, if GDP growth is driven by population growth, productivity growth, and debt growth, I've just explained that debt growth broke in 2008, not coming back. Population growth also peaked back then too. It started peaking in 2000, and what we've seen is things like the labour force participation rate fall. And this is the bigger story, the demographic story behind which this is all driven. Peak humans have created the problem of lower trend rates of GDP. Peak humans are what we face in our future. So the labour force participation rate in the United States, as the number of people who are active in the labour force, has been declining. So that means there's less productivity because we've got this ageing population. Also, there's less industrial production because less people are in the labour force. It kind of makes sense, right? So it's a problem that is going to continue because when we look at forward-looking elements, the working age population in the US has been falling over time. Most countries in the world are actually shrinking now of the major developed economies. With everybody's major economies all shrinking in population, it means their trend rates of GDP are declining, industrial production is declining. But what I found as part of the everything code was that actually, once you strip out all of the complexity of markets, there is one thing going on. Government debt is just being created to offset the aging population. This chart, I think, is one of the most stunning charts I've ever found. I've never seen it anywhere else. Most of my everything code thesis doesn't appear anywhere else in the world. It's all proprietary research. And this simple chart says a lot. So if you get your heads around that, government debt as a percentage of GDP is basically driven by demographics. So as the population ages, growth slows, government debt increases because they're having to pay the interest on the debt to offset the growth that's missing. It's trying to keep the system together. Now, not only that, but if we put the Fed balance sheet against the same chart, we've got the same thing. So the Fed balance sheet is really a function of population. So the older the population gets, the more they debase it. And as we go into the future, you can see that this is a one-way trend into 2035 and beyond. Demographics are destiny, and the demographics are going to continue to decline. So that brings down trend rate of GDP, it increases government debt to GDP, and it increases the use of the balance sheet. So once you understand that, you understand the game that's been playing here. The other one chart that's really interesting is demographics are inflation. So when we look at the inflation in the United States, the core CPI, it's basically births, deaths, but there's obviously that COVID spike. I think we revert back to the normal trend. I don't see how that changes. And then obviously the classic everything code chart, which is the Fed balance sheet versus the interest payments. And we're about to go up that wall of interest payments that either the government ends up with record debts and the bond market breaks, or they have to do something, yield curve control, or just general printing of money. But you see, everything did break back in 2008. Peak population growth created these problems going forwards. And we're seeing the central banks now doing one thing and one thing only. In fact, I think the governments are doing one thing and one thing only. And once you understand this, you understand everything that has happened and why the world is like it is today. Their entire job is to keep afloat the great baby boomer investment complex.
According to Raoul, the global equity market cannot afford to collapse, leading central banks to continuously intervene at the slightest sign of trouble. Despite widespread concerns and predictions of a looming recession, Powell remains steadfast in his belief that a widespread collapse is unlikely. He attributes this to the ongoing monetary support provided by central banks, which he believes will stabilize the situation temporarily until a more permanent solution is developed. Powell, a former Goldman Sachs executive, suggests that artificial intelligence and robotics hold the key to solving the world's demographic and productivity challenges. However, he anticipates that the full potential of these disruptive innovations will not be realized until 2030. In the meantime, he advocates for investing in crypto and tech stocks, which have consistently outperformed traditional assets, such as those reflected on the Fed's balance sheet. Do you agree with Powell's assessment that the financial system can navigate these challenges without enduring lasting damage? Share your thoughts and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.